OPEC members strike deal on oil output for the first time since 2008. African sovereign trios Senegal, Ivory Coast and Togo add to growing appeal for sale of sovereign sukuk. South Africa hires 4 banks to float $2 bonds. Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwawu. OPEC has agreed to cut its oil output for the first time since 2008, with the group's leader, Saudi Arabia, softening its stance on arch-rival Iran amid mounting pressure from low oil prices. Past attempts to reach an output deal have been complicated by political rivalry between Iran and Saudi Arabia, which are fighting several proxy wars in the Middle East, including in Syria and Yemen.
We came up with a way forward that is to consider targeting 32.5 to 33 million barrel per day target. And we agreed on having a high-level technical committee of all OPEC members to study the mechanism of sharing the production at individual countries' level from now till the 30th of November, to be presented to the next meeting in Vienna.
Global markets, of course, have been reacting to this oil output cut by OPEC. Let's now cross over to Frankfurt and see how the market there is digesting this news. DWTV Channels TV business correspondent Javier Arguedas joins me now. Good afternoon, Javier. OPEC seems to have surprised the markets by striking a deal to cut oil production. How is your market reacting to this?
Good afternoon, Jimmy. Well, the reaction that we saw was very typical for movements in the oil prices, at least at the beginning of the trading session. We saw the DAX jump more than 1%. The main German index was clearly celebrating the decision, and the companies that were profiting the most were, of course, the companies that are related to oil production and to energy. So we had RWE and E.ON, the both most important companies in the energy sector here in Germany, but also commodity-related companies like ThyssenKrupp, the steelmaker, was also up significantly. The downside was, of course, for the tourism industry and the airlines specifically, because, of course, higher costs for oil mean higher costs for the companies in general. However, all of that faded away throughout the trading session. We are now seeing the DAX just up a half percentage point. It's not even sustaining that. So it means that the reaction was not very intense and that investors are skeptical about how much the impact is going to be of this agreement.
Now, perhaps another news item making the rounds today is Deutsche Bank, and as the speculation that the bank could need a state rescue. We saw the shares of that bank go up by 2.6% earlier. Now, is it that the government and financial authorities finally agreed to rescue that bank?
Well, we're definitely not there yet. It will probably take a while. It's a very complicated decision because on the one hand, the CEO of the bank said that he never requested aid in the first place. He is very secure and very confident that the bank is going to manage the problems that it has on its own without state aid. On the other hand, it's also important to remember that people here in Germany are very skeptical of any state money being dedicated to rescuing the banks, especially considering that most of the problems that that Deutsche Bank has right now are due to ethically questionable actions by the bank. So it's not going to be easy at all to justify that, especially not in an election year or in the primary to an election year, because next year we will have elections here in Germany. So politicians are especially careful. That's why investors are not necessarily celebrating state aid yet. It might happen, though. It might be necessary because the bank could otherwise not subsist, and Deutsche Bank is very relevant for the whole economic system. So we'll definitely keep a close eye on that one.
Maybe the government may not have any choice but to, rescue that bank, being the biggest bank in that country. Well, another bank in focus today is Commerzbank. It plans a wide-ranging overhaul that includes laying off close to 10,000 jobs, merging 2 large units, and scrapping its dividend for this year. What are the investors and shareholders they're saying about this?
Well, of course, it's alarming news for Commerzbank, as it is the second largest bank here in Germany. It's important to remember that the bank was performing quite well last year. It had more than 1 billion euros in profits, but the profits have been fading away as well. In the first quarter of this year, the profits were down more than half. In the second quarter, it was down 32% rather. So that means that if they continue on that road, well, they will start making losses very quickly. So they do have to do something. And the problem is that with the low interest rates that we have here in the Eurozone, well, the main income source for banks is not there. Banks do not get any money from lending. And that is the most important problem. That's why Commerzbank is announcing these plans to restructure. Now, investors, of course, do not like the news. They, of course, do not like the fact that they're not getting any dividend. But on the other hand, most voices say that it is a necessary step in order to survive, because the other alternative, which would be Commerzbank making losses, is definitely not one they would like to see.
Right, let's hope that those plans work out for good for that bank. Thank you very much, Javier. And in Asia, most markets there closed higher today after an oil price rally amid reports of potential production cuts. But India's shares dropped after reports that the Indian army conducted strikes against the militants in the disputed region of Kashmir. Australia's ASX 200 closed up 58.95 points. In Japan, the Nikkei 225 rallied 1.39%, while the Topix index was up 12.48 points. Across the Korean Strait, the KOSPI advanced to 15.66 points. Hong Kong's Hang Seng Index traded nearly flat at 23,638.77 in late afternoon trading after erasing most of its earlier gains. Mainland Chinese markets were higher, with the Shanghai Composite closing up 10.37 points and the Shenzhen Composite adding 7.62 points. And back here in Africa, Senegal has upsized its second sale of sovereign sukuk, with Ivory Coast and Togo expected to close their own deals in coming days as Islamic finance gains traction as an alternative funding option for African sovereigns. Despite strong growth in the Middle East and Southeast Asia, Islamic finance has lagged in Africa, although it could be an important growth driver for the industry as it is home to a quarter of the world's Muslims. Senegal issued a debut sukuk in 2014 and returned to the market in July with a 10-year deal paying a 6% profit rate backed by assets from Dakar's international airport. According to the Saudi-based Islamic Corporation for the Development of the Private Sector, investor demand prompted the issuer to seek regulatory approval to expand the size of the deal, which helped arrange the sukuk. And South Africa's Treasury has confirmed it had appointed 4 banks to offer 12-year and 30-year dollar-denominated bonds to international investors. The Treasury said it will also be proposing a switch transaction in which investors holding existing bonds maturing in 2009 and 2020 could either swap the bonds for cash or exchange them for the new 12-year tranche being proposed. The 4 banks are Barclays, HSBC, JP Morgan and Ned Bank.